Extraordinary.
There you are.
Solved the world's problems. Should we start? Are we good to go? Yeah,
Sure.
Happy? Good to go? Hello everyone and welcome to another episode of Taking Stock After the Bell, episode 26 I believe. Joined as always by James Hughes, fresh from back from the ski slopes. Yeah. And also delighted to be joined by two of course Cheviot's finest research analysts. Well, they're all fine obviously, but these two, some are finer than others. Sheena Berry and Ben Barringer. Good afternoon to you both. We've got a few intros. Ben's been on before, so I've cut his intro down a bit. But in terms of Sheena's, Sheena graduated with a degree in mathematics from the University of Edinburgh and has a master's degree in financial economics from Boston University. She became a healthcare research analyst at a UK-focused investment bank before joining QC in 2018. Her role centres around in-depth analysis and understanding of investment opportunities within the healthcare sector, including pharmaceutical, biotechnology, medical technology, healthcare services, animal health, and life science tools companies. Sheena is a CFA charter holder. Outside of work, Sheena has a strong interest in activities such as cycling and running, and is signed up to trek through the jungle in Panama later this year, I believe.
Yeah, that's about right.
Good, superb.
As you do.
Well, welcome anyway, Sheena. As for Ben graduated in econometrics in Nottingham University in '96, joined the Lloyds TSB private banking graduate scheme before joining the Quilter Cheviot equity research team in 1999, with 2024 marking his 25th anniversary at the company. Amazing.
Very much so.
CFA charter holder. Ben is proficient mountain biker, diver, skier, snowboarder, qualified kite surfing instructor, and a member of the Wine and Spirits Education Trust.
That's the most
we've got
important
all
one.
the hobbies here.
There you go.
Extraordinary day.
Johnny Raymond, he's a golfer. That's
He's a
it.
golfer.
And a weightlifter.
Definitely won't find me trekking through the jungle, that's for sure. So what I thought we'd do today is, it's been earnings season, which is this kind of period in your lives every now and then, or every quarter I suppose, obviously, where companies will report, so you get up super early to read loads of transcripts and listen to conference calls and then try and tell us investment managers what it means and then write a note and then update your models and update your views on the companies, right? And that can be quite stressful, quite time consuming, a few hours put in, but always interesting, I guess, and to find out what's going on and then dig in a little bit deeper. So I thought we'd take a few stocks today and run through them, taking it in turns, two each, 10 minutes each, maybe quick fire. Hughesy can fire him with a few questions.
I've always got a few questions.
And we'll go from there. But just from sort of, why are earnings important, I think. And listeners and viewers will remember the episode we had with Freddie late back before Christmas. Episode number escapes me, in terms of him explaining that earnings, profits, fundamentally is everything. And share prices follow suit, as the chart here shows how earnings per share has progressed since 1954, and price changes broadly follow that. So, generally speaking, if you're buying stocks and buying companies that are growing profits, then the share prices should follow suit. Hence the, fundamental analysis should really focus on how companies are doing and what those profits are doing over time. So kind of, I guess investing 101, right?
Yeah. Graham and Dodd.
Graham and Dodd, exactly. So if we bring that sort of closer to home a little bit, we've got a chart here of how the world, MSCI World has done, which is in the top pane of the chart in yellow, and then the darker blue line in the top pane is how the earnings per share of MSCI World has done. And the bottom part of the pane is the year-on-year change in earnings. So the last few years, if we look at the right-hand side of the chart, obviously we can see the pandemic there in 2020, which caused a contraction in earnings. Funny enough, we were all sat at home not spending a great deal of money. And then we had a good recovery in earnings, and then we sort of had a sort of slowdown through 2023 and into sort of early part of 2024, and we're just sort of coming out of that earnings cycle now a bit. I mean, Sheena, if we start with you, what's your sort of overriding feeling of your sector and the earnings progression and how it's all looking?
Yeah, I mean, obviously when the pandemic hit, depending which part of healthcare you're looking at, depending how it was impacted, but obviously healthcare had the solution to try and get us out of the pandemic. Sure. So obviously when we got the COVID vaccine, we definitely saw some of the COVID winners coming through in that sense, whether it was companies, with the vaccine or helping with ventilators and stuff. And then once we sort of were coming out of the pandemic, there's a lot of COVID headwinds. 2023, we saw a lot of that where growth was slowing for some of those pandemic winners. So as we're coming into 2024, hopefully those COVID headwinds have now subsided, and we'll start to see, the core of these companies sort of starting to grow again, and we'll see sort of headline numbers sort of generating growth again. But yeah, it's been a bit of an up and down. But
it's a bit of a roller coaster. And it's interesting when you say that. I mean, the pandemic is still affecting companies and sectors, to varying degrees, but it's still there in the numbers because we've still got comparators from a year ago, and when we were still in the teeth of it, really, weren't we?
A multi-year hangover.
Yeah, no, definitely.
And it's also that obviously we had the pandemic vaccine sales, but it's now in a commercial setting, so it's not really the investment case of these companies what the COVID vaccine generates in revenues, but there'll still be that offering there from the companies that benefit from it. And actually, what was quite interesting was the sort of the COVID vaccine winners with the technology, the mRNA technology. That platform has been proven now, and actually what will we see from that platform could be quite exciting. Companies are still very much working on that technology platform, so there'll be some more to come from that.
Oh, good. And Ben, what's been happening in tech?
I mean, COVID was very much the well, I think during COVID, there were only three sectors that grew: healthcare, utilities, and technology. And that's obviously because everyone went out and bought new laptops for homeschooling and for work, and everyone started using more Netflix and sort of remote digital services, and companies pushed harder on that digital transformation piece as well. And so it was a hugely positive time for tech in 2021. Into 2022, some of those comps started to get harder. People spent more money on other things other than because they could. And also, there was a little bit of a sort of recessionary signs around as well, and people started to pull back a little bit. That has very much changed again back in 2022 and 2023, such that things have stabilized an awful lot more. So we really look at IT spending, and IT spending came down from its sort of peak in COVID of almost 5%, and it's now at around 2.8, something like 3, and 3 will be 2024 will be about 3%, something like that. So that's pretty stable. That button, that push on digital transformation continues to be quite strong. That often means a move to the cloud, and of course, one of the preconditions for AI is having a lot more of your stuff in the cloud as well. So we feel pretty good about the setup in technology at the moment. Mainly in those areas like digital transformation, cloud computing, AI, cybersecurity. We feel pretty strong about those, and the quarterly numbers certainly reflect that.
Good. Well, that's a very neat segue onto our first stock, which is a company that most of you might have heard of. It's called Microsoft.
Sure.
Do you want to give us a quick, we've got a graphic up here on the screen. We've got the share price. We've got the earnings per share in red, which I think, again, the share price matches the EPS progression.
Yeah.
Do you want to give us a rundown on overview on Microsoft, Ben?
Yeah, I mean, look, most people know what the business sort of does, but let me sort of try and segment all the different bits. Obviously, now it's the biggest company in the world at 3 trillion market cap, but it's still able to grow top line 17%, earnings well over 20% at the last quarter. What are those intelligent cloud, all those three segments, what do they actually mean? Intelligent cloud is the fastest growing business. The main asset in there is the Azure cloud business, but there's also some AI assets. So there's also the legacy server assets as well. So typically Azure is the number that people watch, the growth rate there, and that business it's almost as big as AWS now. It's getting close to AWS, which is still the biggest cloud provider.
That's the Amazon Web Services.
That's correct, yeah. And so that's growing about 30%, and Azure has been accelerating actually out of the last couple of quarters, and so that's pretty strong. Some of that is Microsoft is just the natural home for mid and large enterprises to go to. It's a very safe place for people to go to because they've got the full stack in terms of infrastructure and software and security and so on and so forth. And so it's hard for a CTO to get sacked if you employ Microsoft stuff. So that's the intelligent cloud business. Productivity and business, that's generally the software business. So think of that as Office, so Office 365, Dynamics. I think LinkedIn is also in there as well. Remember, they own that asset. And that business is growing sort of, mid-teens, something like that. The PC business, more personal computing is called, is a bit of a hodgepodge. Classically, that's been the Windows business, which is linked to PC units. Now, PC units, as I just sort of talked about, had an incredibly strong COVID and then a terrible 2022, and now has started to recover. Quite interestingly, we still expect PC units to grow at sort of GDP, sort of 3%, something like that. But there's some... we're now lapping the COVID period 4 years, which is typically the life of a laptop.
Yeah, so I'm just looking at my laptop here. So what is the cycle replacement?
4.2 years is the average, right? But it varies a bit like phones as well. But you've also got Windows 11 coming in, and so they're going to stop supporting Windows 10 reasonably soon. So that drives an upgrade cycle, and then the next stage of AI. Is something called Edge AI, which is rather than doing AI in the cloud and you accessing it through the cloud, you do much more of the processing on your laptop or on your phone. And so there's potentially, and it's probably not a 2024, it's probably a 2025 story, there's more processing, and that may require an upgrade to your laptops as well. So the PC business, as I say, is the relative drag. In terms of geography, it's pretty global. It's a bellwether, I guess is the right way to think about it.
Bellwether.
And have we seen the impact of AI on cloud growth yet, or was that just starting?
Yeah, I'm trying to remember the number. It was at least 3 points, if not more, of Azure growth. In fact, I think it was more like 5 actually of the 30%. So they do quantify it. Yeah.
And are they giving guidance on where they think that can get to?
They don't give explicit guidance on that, no, but it's definitely supportive. And remember that Microsoft is getting the benefit of OpenAI, because all of the OpenAI, which is ChatGPT, that compute is being done on Azure, right? And that's one of the benefits of them having a $10 billion stake in OpenAI. We won't go into the intricacies of the governance there, but that gives them certainly a good step up. But also. Lots of companies are exploring AI as well, particularly with their Copilot product, which they released on November the 1st last year. That's integrating AI into the Office suite. And so that's a slow burn for the growth of the Azure business, but also the software business as well. Basically, if you can add, this is classic software playbook, if you can add value into your software, you can price it, and that gives them a good pricing runway for the future.
Do you want to touch on the results and what the sort of growth rates are?
Look, top line was 17%. Profits were up more than 20%. EPS was up 33%. They're guiding for around 12-15% next quarter as well, which for this size of business is pretty good. They should be a double-digit grower for this year, if not more. I would say. And that's pretty impressive.
And then more thematically, we've got a couple of charts here that you've pulled out in terms of in all the right places.
Exactly right.
Difficult to read the writing, but
so look,
some of the themes.
Yeah, exactly. So they are a one-stop shop. If you want to do this on the left side, this is the priorities for chief technology officers within corporates. I watch this very carefully, so not just the level of spend, but also where they're spending. And so top is AI and machine learning. You can do that at Microsoft. Analytics, you can do that at Microsoft. Security, they're the biggest actually security company in the world. It's actually it's probably less than 10% of their business overall, but their sheer size means that they're actually the biggest. Digital transformation we've talked about, cloud computing we've talked about, ERP applications. Depends how you define enterprise resource planning, but they certainly have Dynamics and CRM. Look, they are the one-stop shop, if you will, for chief technology officers. And then on the right side, where are you spending more of your budget as a CTO? With Microsoft in Azure, and obviously Amazon. That's the AWS business, not the e-commerce business. And then again, those are the winners, and we like all of those businesses actually. And then on the bottom is the losers. We don't like any of those businesses, right? And there's my job in a nutshell, if you will.
Good. Great. Well, that's very comprehensive. Just touch on valuation, Ben. We got a sort of chart here. And obviously the stock's done pretty well, but it's back to, kind of, in sort of valuation terms, it's kind of back to where it was in 2020, 2021. Sort of 34 times, is it roughly?
I look at 1 year beyond
forward.
that, so which is about 30.
Yeah.
And we remain pretty content with that. If you look at it on a price earnings to growth, typically we think at around 1.5 is about right. So 30 times and about a 20% earnings growth. We're comfortable with that. You ideally can get tech companies on a peg of 1, right? That would be wonderful. But the resiliency and the repeatability of their business, it's very high subscription, the areas that they're in, I think that justifies 1.5. Intuit similarly, which is another high quality software company we like.
Favourite of the pod, Intuit.
There we are. Would trade on that kind of multiple as well.
Yeah, and that's interesting just for the sort of the audience and the Sheena, I'm sure it's the same in your sector. If a company is estimated to grow at a higher rate, you're probably going to pay a higher valuation multiple for it. So it's, often in terms of sort of fund management analysis and research, it's very much a case of how much growth are we likely to see? Is it likely to be more or less than what everybody else thinks, and how much are you paying for that growth? And Microsoft certainly has been a stock that's been on a kind of premium rating for a long time for very good reason, because it does keep churning out the growth because of all the reasons we talked about.
And just for the listeners that haven't got the slides, what's the second and third pane?
Second and third pane thing, free cash flow yield and dividend yield. I mean, American companies don't pay dividends much. So
I would note that the free cash will come down because they're spending quite highly on CapEx, and that's to build new data centers as well. But actually, we think that's good CapEx, as it were, because we think they can create good returns on that. And that, in turn, is very good for the component suppliers that, like NVIDIA, AMD, Micron, so on, that put the components into the data centers.
And do they have specific areas around the world where the data centers?
So they have a footprint and they try and be where their customers are. There are some countries that have specific requirements about where the data can be stored, data sovereignty, I guess, and so Microsoft tries to move to that. And then you've seen that Google's actually just building a data center in the UK. I think it's about $6 billion investment, and that's again to try and broaden their geographic footprint. But you'll often find that one of the great things about cloud computing is that your data is mirrored around the world, right? So if a data center does fall over, it's picked up another way. It's one of the many benefits.
And the cloud is just growing so quickly. Is there an issue on the amount of land available for data centers? Is that becoming?
It's not land. It's more electricity and power, because if you build a data center, it's actually quoted in megawatts. So finding good power in good locations is difficult. So these guys do a combination of organic, building their own, and also buying in from companies like Equinix, which we also like as well. Yeah,
interesting.
Good stuff. Sheena, moving on to AstraZeneca. AstraZeneca is the second biggest stock in the UK, I think, behind Shell, probably. Obviously, been in the news during the COVID pandemic for the vaccine, etc. We've got a graphic up here with the price chart in blue and the earnings progression in red, and you can see quite clearly, actually, in the EPS chart, that bump in 2022, which I guess would have been kind of COVID-related stuff. And we've got the split of the business on the left. So do you want to sort of talk us through who they are, what they do, and why we like them?
Sounds like Brian Daly.
Where'd you come from?
Well, AstraZeneca, obviously a big global pharmaceutical company, has a pretty diversified offering. So the portfolio of drugs, sort of in oncology, cardiovascular, respiratory and rare disease. The oncology franchise really is the largest product division, probably around 40% of group sales. Obviously they've got a significant number of drugs, but just to touch on the three largest at the moment in the portfolio, a drug called Tagrisso, which is a pill approved in the form of lung cancer. Imfinzi, which is also an oncology drug in another form of lung cancer, and Fixigra, chronic kidney disease and heart failure. Other oncology drugs that you probably hear a lot about when you talk about results, Lynparza and Calquence, good growth drivers for the group. And then we've also got some of the younger portfolio, so drugs such as Enhertu, which AstraZeneca has in partnership with Japanese company Daiichi Sankyo. That one's generating a lot of good growth in breast cancer, but also being tested in other forms of cancer too. Obviously, the newer drugs will help offset some of the older drugs. So one of the older drugs, for example, that used to be a massive drug for AstraZeneca is Symbicort, respiratory drug for asthma and COPD. That's now facing generic competition, so we're seeing sales come off of that.
How many years does a pharma company have with this drug until it gets generic competition? Because it's a patent, right?
Yeah, so a patent typically lasts 20 years.
20 years.
But that doesn't mean you get 20 years of protection on the market, because the patents are put on the drug whilst it's in the clinic. So depending how long the drug takes in clinical development to then get approved will dictate how much life it's got on the market, really, before potential generic competition.
So the sort of the treadmill, if you like, for an AstraZeneca is you find a new drug, you get a patent, you get it to market, you've got X number of years, and then you get a load, and you can price it whatever you want because it's yours.
Yes.
And then it falls off. Is that
usually
sort of treadmill type?
Generally speaking, we could say if there's generics ready to go, as soon as the drug comes off patent, you could probably say it loses about 80% of sales.
80% of sales.
If there's drugs ready to go.
Thanks.
Yeah. Because when it comes to the generic market, for a drug to be generic, it has to be the exact copy of what was the branded drug was. Mm-hmm. So the differentiating factor with generics is essentially price. When it comes to that, you're just competing on price, really, on the whole. Yeah. So for pharmaceutical companies, that's why it's obviously very important to keep investing in R&D, to have a reasonable number of products in the pipeline to ensure that obviously you can get this future growth when some of these bigger drugs that have been blockbusters for you essentially lose patent protection. Whilst obviously just touching on AstraZeneca, whilst it is a UK listed company, less than 10% of its sales are actually in the UK, and like a lot of pharmaceutical companies, the majority of sales is made up in the US.
Right. And that's like a lot of UK stocks in general, isn't it? Most of the revenues from outside the UK just happen to be listed here. So just on the sort of pipeline, in a minute, you sort of touched on different pharma companies have got different stages. They might have more drugs that are later in life. Lots of other companies have presumably got more drugs earlier in their life. Yes. Do you sort of touch on the sort of where AstraZeneca sits in that, and what we think about where their pipeline is? Yeah,
AstraZeneca actually has quite a lot in its pipeline. The group's very much focused on reinvesting in the business. Just in the earnings results there, it was talking about how it was investing more in R&D, but not only in that, it was also investing behind making sure the launch of newer drugs is going well, to making sure that it's getting out there and it can generate sales. It's got some ambitious targets in place. Mm-hmm. So in 2023, there was about 27 phase 3 trials initiated across 18 different sort of drugs. There was 24 regulatory approvals in major markets. And the group has an ambition to launch at least 15 new molecular entity drugs by 2030, and it's actually already achieved 4, and it was talking about them in the results recently. So that's in areas, respiratory and oncology. But also new platform technologies, cell therapy, gene therapy. But actually in oncology, we're hearing quite a lot about antibody drug conjugates. Now, what are they? You could sort of class them as smart chemo, shall we say. Okay. So it has the potential to deliver, highly potent chemo to cancer cells, but hopefully without damaging the healthy tissue around sort of tumours. Yep. So that is an area that AstraZeneca is investing in, and it's also investing in that space, on its own, but also it's doing it in partnership with Daiichi Sankyo. So that drug Enhertu is an antibody drug conjugate. So we'll hear more about that, but it is, very much trying to invest in the pipeline to make sure that it continues to grow going forward. Mm-hmm. There's definitely lots going on. AstraZeneca will have a capital markets day in May, so I'm sure we'll get some more of a deep dive within what's in the pipeline and what the company is also really excited about. And some of that might be earlier stage stuff, which, when we look at companies, phase 1 is very early stage, maybe doesn't get a lot of attention by the market because most drugs typically fail in phase 2.
Right. Okay.
So until it's really in phase 3, maybe that's probably when people get more excited about what the potential could be.
Start pricing it into kind of future earnings. Because this is kind of an expectations probability game, I guess, right? If you've got 10 drugs at phase 1, then you might have 5 at phase 2, and you might have 1 at phase 3. So, you put 10% probability in phase one. I don't know how, but it's sort of to be simple about it.
Yeah.
I guess the more stuff you throw at the wall, the more sticks. It's kind of a very simple way of showing it. So will you be going to the Capital Markets Day?
Hopefully, they'll be hosting it at their big new site in Cambridge. So
Cool.
yeah, hopefully I'll get to go.
Well, he can go and carry a bag for you.
I'm fascinated by it.
And then in terms of sort of the results and the earnings, I mean, how are the sort of profits and the numbers shaping up?
Yeah, so actually, when they just announced the most recent results, they were also celebrating their 25th anniversary. But unfortunately, the Q4 results were probably a little soft compared to expectations. Mm-hmm. However, the company is generating very good growth. So the total revenue of core products, 16% growth in the quarter, maybe about 15-16% for the full year, and then College franchise is growing over 20%. So, whilst you say it's a softer quarter, it's still a very good growth outlook. Yeah. Earnings did miss, but that is because R&D was higher than expected and costs behind recent launches were more as well. Okay. So I think sometimes when it comes to pharmaceutical companies, if you're investing more in what you think is attractive in the pipeline, it's not necessarily a bad thing.
Yeah, absolutely right. And then if we sort of touch on valuation, I mean, the share price hasn't done a great deal in the last year or two. I was saying that the share price chart that we've shown, we're just going to show here briefly, it's actually popped up since this chart was done in last week. We've had some good news on Tagrisso this morning.
Yeah, so the shares came off a bit on the results, but also in 2023, there's a lot of focus on a drug readout. We'll call it DATO in lung cancer. It met its primary endpoint, but I think expectations were so high for it that actually, when we heard the data, it maybe took some of the shine off of it. But more recently, we've heard that it's now been filed with the US regulators. They've accepted it, and there's a potential approval with that drug now by the end of the year. So that's helped with sentiment and increased the share price a bit since then. And also, as you said, some good data with Tagrisso in lung cancer, some late stage lung cancer. So yeah,
it's back to £105 or so.
So generating
valuation.
Actually, given the growth outlook of AstraZeneca, the valuation's actually pretty attractive. It's as you say, it has sort of come away and not done much over the last year, but the growth is still very attractive. Yeah. So on looking at 2024 PE, it's sort of 16 times. Pharma's usually in the 1 year forward 10 to 20 times. And as you say, usually yes. But as you say, you usually pay a bit more for better growth, where actually AstraZeneca's offering double-digit growth and a very attractive valuation.
16 times. Yeah. Do you think Astra's hurt? This is a slightly philosophical question. Does it get hurt by being listed in the UK versus the US, do you think? And is it one of these stocks that's a candidate for swimming across the pond?
Well, I suppose it's got the dual listing. I suppose at the moment, so Pascal, the CEO, he's been there for years. He was CEO when he sort of pushed back on the Pfizer bid at £55 years ago. There has been rumours that he's going to retire at some point, and you do see the share price come away with that because he's done a great job. He is ultimately going to retire at some point, so when someone steps up, do you think they might reassess where it's listed? Possibly.
Wouldn't be for us to speculate on this programme, but it's been a theme for the last few years, isn't it? A number of stocks have relisted from the UK.
And 16 times for double-digit growth with a great pipeline does
sounds okay.
Sounds like it might be a bit different if it was US listed. But then then US Pharma's had its own struggles as well, and it's not massive valuations over there, is it? So it depends on the stock. But.
I know, and then we've got some big European companies as well that have done well. So it's.
Good, thank you for that. Interesting stuff. Ben, Netflix, another company that some people might have heard of.
Yes, I've picked some easy ones.
Do you remember the DVDs that used to get posted?
Well, that's it.
Well, look, I love this stat.
It's amazing.
So if you go on to do a company overview on the terminals that we use, it still actually splits the business segment out between streaming and DVD.
Yeah, does it? That's actually inaccurate because 2 quarters ago they shipped their final DVD.
So, was that to you?
And it was not to me, no. I mean, this is a company that's been very disruptive. I mean, this was the company that didn't stand a chance against Blockbuster, right? And now it didn't stand a chance against Time Warner and Disney and all of these companies. Actually, I think the former Time Warner CEO, a former one, described Netflix as about as threatening as the Albanian army, right? Which is famous last words, right? So he's long gone, and Netflix continues to go from strength to strength. So it's a streaming business. I don't know if you've quite. And let's face it, I mean, this is one of the problems with what happened in 2021, 22 is if you didn't have Netflix during the pandemic, you were probably unlikely to get it, right? And that was what caused. That and tough comps is what caused the slowing in the growth rate and the stock to come down.
Yeah, and we can see that in the price chart. And obviously, the blue line at the top here is the share price. The pandemic's pretty clear, and you can see it in the earnings in the red as well, can't you? There's earnings spike up, and then of course, subscriber growth goes to zero post-pandemic, because if you were going to get Netflix, you probably already got it. And then the market kind of threw its toys out the pram. The stock went down quite precipitously, didn't it, in 2022?
Down 80%, wasn't it?
Yeah, and then it's back sort of towards those all-time highs.
It was the loser, and now it's very much the winner, and it's done that by basically being a pure play. It doesn't have any legacy media, by also re-examining, where it can generate and how it can generate revenue. So obviously it's a very simple model, right? It's number of users times the price that you can charge them. And you need number of users to improve. So that has been helped by the fact that they've been cracking down on password sharing. So I think when they announced this, they had 240 million subscribers, and they said there was another 100 million that they expected to get from password sharing. And then the other piece is, what can they do in terms of pricing, right? And so that falls into two camps, actually. The first one, and probably most importantly, this left-hand chart just shows you a little bit about, the right-hand chart, let's look at this first. You can basically price if you have good engagement, right? If people watch your service, it's a very simple piece of economics or price elasticity. You can charge them more, and you can see a very good correlation between all the different services available there, and how many minutes people watch it, and how much you can charge for it, and that will continue, and they continue to drive the content. I think people will generally agree that the library and the quality of production on Netflix is pretty industry leading.
I think we talked about this last time we were on, actually, in terms of recession and what happens in a recession, and you used to cover Sky back in the day, didn't you?
That's it. I mean, TV is a very cheap piece of entertainment, right? Them and video games are probably the cheapest entertainment you can get, right? And so people in a recession tend to draw back, and I think the market also went through a bit of a worry on that. As you say, I'm very lucky. I used to cover Sky TV, which obviously got bought by Comcast, but they were very defensive through recessions. People very rarely cut their cord, as it were. So that you get this virtuous circle where you get content, which drives engagement. The engagement drives price, and then you reinvest that price back into more content, and it's a scale game. Like, the winner wins. And that's what you can see on the left chart, which is that in terms of minutes spent on the service, I think this tells you what most people know, which is that Netflix is the most watched service by quite a degree. Hulu, for those who don't know, is a US service. It's a combination of Disney assets, Fox assets, and some Comcast assets as well. You can see there them being much bigger than HBO Max, Amazon Prime Video, Peacock, which is NBC, Disney Plus, obviously. Disney's interesting, isn't it? Because if you've got children or you're a Star Wars fan, you've definitely got Disney Plus. If you're not, you probably don't. Right? And then there's
we've got Coco Melon on Netflix, and
there you are.
And we've got Bluey on Disney. So
Bob Iger was saying that Bluey was the most watched show on Disney Plus.
Have you watched it?
I love it. I think it's absolutely
hilarious.
Awesome.
It's absolutely hilarious.
I'm very happy. There's some absolute rot on children's television, but Bluey is one of the better ones. It's very philosophical. I like the dad in it,
The dad's a legend.
As opposed to Peppa Pig, where the dad is an absolute moron. Sorry.
Of those 100 million extra users they were looking for password sharing, have they said
23.
So
Apologies. No, that's the advertising number. No, they haven't. They are gradually working through it. 23 million is the number of users that have subscribed to the other piece, which I haven't talked about, which is the advertising piece. So if you can't afford Netflix or you want a cheaper price and you're trying to cut back, this is one of the things that's great about sort of recession proofing. You're trying to cut down household spending. You can move to the ad supported tier and save some money. The great thing for Netflix though is they offer that at say a $3 discount, but they make $5, maybe $6 from the advertising that they provide, right? And so this is again another
passed on.
No, I mean, so if you will, the advertising service is ARPU accretive, and so that's very interesting because then Netflix is faced with two choices. They can try and drive people to the ad-supported tier, and they make more money, or they can drive the price of the traditional tier up, right? So it's sort of a win-win if you think about the sort of game theory of it.
And what did the results sort of tell you about the thesis and any real sort of change in how you thought about it?
I mean, subscribers continue to be very, very strong, actually, driven both by new geographies. So more developed markets have sort of flattened out, but there's still good growth in APAC and LATAM. And then there's the password sharing piece, which they're being quite deliberate about, actually. Everyone thinks it's going to sort of come in as a big clampdown, but actually Netflix is a data company. They know your usage, and so they know your price elasticity, and so they know what you can take and what you can't. People who are like family plans and things like that, they get pushed harder on the price because, let's face it, they can't move, they can't hop off. So results are very good. Growth has come back went down post-pandemic to sort of 2-3%, something like that. In fact, subscriber growth was even negative. Now revenues have re-accelerated to 10% plus. And the great thing about this business, from my perspective, is that it is a very high fixed cost business, which is if you can grow top line, the leverage in the business is huge. So they're getting 200 to 300 basis points of margin improvement. So margins are just north of 20% now, and there's a good path. If you look, this is one of my cornerstones of my thesis when we initiated on it, was that if you look at businesses, TV businesses that aren't even global, they're just national. That have that kind of operational leverage, you can get margins in the sort of 30-40% level. So that's what I think the biggest thing that people don't realise about Netflix is there's a huge profitability leverage. You've got the free cash number up there.
Free cash flow yield is 3%, 2.5%.
I mean, it used to be unprofitable, and it's gone from unprofitable to very profitable, modestly profitable, and I think it can be very profitable in a space of 3-4 years. So it's very.
And have I seen they're adding some sport and some games?
Sport is something they flirt with. So that Netflix is.
So I've read a few reports on. They think sport is often a downfall of a subscriber type.
Their line is, "We are not anti-sports. We're just pro-profit." If you look at the game theory and the economics of owning a sporting league or the rights to a sporting league, the sporting league is normally the thing that the place that wins, right? And the company that's broadcasting it loses.
And within the sports league, it's the players who win as well, isn't it?
Without
followed by the Cheshire Bentley car salesman.
I think my old Sky notes used to read something like that. Another win for Cheshire car sales, right?
Good. Interesting stuff. Good business, Netflix, which we're all pretty familiar with, which brings us on to the final stock of the day, which we touched on a little bit earlier, Novo Nordisk. Now, not many might have heard of Novo, so do you want to give us a sort of overview on Novo, Sheena?
I think more might have heard it in the last year, but so Novo Nordisk, best known really for its diabetes franchise, and now its obesity drug portfolio. It does also make some drugs for like haemophilia and growth disorders. However, it's the diabetes and obesity franchise really that makes up the majority of the business and really are the key focus areas of the investment case. Within the diabetes franchise, you do have insulin products. They're probably makes up about 20% of group sales.
Are they injectables or are they?
Yeah. but it's a mixture, but yeah. But really the growth is being driven by these GLP-1 drugs, which are glucagon-like peptide-1 agonists. So a GLP-1 is essentially a naturally occurring hormone produced by the small intestine, and its role really is to increase insulin secretion in the pancreas. So these drugs essentially try and replicate what is a natural process. So within the diabetes franchise, in terms of GLP-1 drugs, Novo Nordisk has Victoza, Ozempic, and Rybelsus. How do they all differ? Victoza is a daily injectable, a slightly older product. Ozempic is a weekly injectable, and Rybelsus is a daily tablet. But diabetes, type 2 diabetes, quite often is linked with obesity. So now Novo Nordisk, whilst it has actually had an obesity drug in its portfolio for a long time called Saxenda, really it's all about Wegovy now, this new, relatively new drug that from Novo Nordisk, again, a GLP-1, but Wegovy is for obesity. And that's been in the news quite a lot. So over the course of 2023, we heard a lot, whether it was celebrities taking Ozempic or Wegovy to try and get red carpet ready. They're very much in focus, and people are probably trying to take Ozempic even if they've not got type 2 diabetes, to try and get the weight loss aspect of it, because Wegovy demand has far exceeded supply, so it has been slightly supply constrained.
Is it available in the UK at all?
So Wegovy is now available in 8 countries, including the UK, US and Germany. So they're slowly sort of launching it in new countries, but because it has been supply constrained, they've had to be slightly careful of how quickly they do that.
And what's the cost of the prescription?
Well, it varies. So say, for example, you can get an out-of-pocket, you could pay for it yourself, and it could be £200 to £400. It depends where you are per month. So, yeah, you can.
How long do people take it for?
Well, the thing about, say, Wegovy is you should take it. So at the moment, people are probably taking it for about a year. They are monitoring it. Some people say that they want to take it forever. However, what we're seeing at the moment, especially with the likes of Wegovy and Eli Lilly is another company that's launched their obesity drug called Zepbound. What we're seeing with them is actually the quality of the weight loss. It's not just fat, it's taking muscle as well. Yeah. And especially as you get older, actually retaining muscle mass is actually quite important. But what we're also seeing is that when people, they take the drug, they lose weight, they feel great, unless they've suffered from some of the side effects. But then when they come off it, they'll then put some of the weight back on. Okay. So you might find that people come on and off of it and they sort of go like that a bit with their weight. However, other companies are working on drugs within the obesity space, including Novo Nordisk. And they're looking at essentially trying to have better quality of weight loss. Yep. And we should get, so CagriSema is a drug that Novo's working on. We'll get some phase 3 data from that this year. And that has the potential to offer better qualities than Wegovy, for example.
Some quite big ethical questions here, aren't there, about obesity? Many might think is kind of self-induced and shows a lack of willpower, etc., and others will blame kind of big food for obesity, etc., being endemic. Is it sort of, is the Wegovy wonder pill? Is that the sort of right way of solving the obesity problem in society, or I don't know?
Yeah, well, you're right. Yeah,
you don't need to answer that.
Yeah. Well, no, I was going to say is obesity probably historically was viewed more as a lifestyle issue rather than a sort of medical issue. Yeah. And I think obesity is linked with a lot of different chronic diseases, and actually there's multiple clinical trials going on with Wegovy, whether that's in chronic kidney disease, cardiovascular disease, sleep apnea. So Novo's trying to show that actually by addressing obesity, it can help some of these things. And cardiovascular is like one of the number one causes of death. So if you can help all of stem that, then you can help essentially save a lot of money through healthcare in healthcare systems. So yeah, it's I suppose it's about educating and showing the other benefits of it as well. But there's sort of, when people are taking the drug when they don't actually need it just because they want to lose a bit of weight, then that's completely different to actually the health benefits of it. So we'll continue to get a lot more data from Novo Nordisk within obesity, but other companies are, I suppose, seeing the interest in this space and are trying to get in themselves. For example, AstraZeneca and Roche, for example, just towards the back end of last year, entered into agreements with other companies to start looking at assets within the obesity space, quite early on in the clinical stage. But
you kind of expect that in any business, don't you? If there's a new kind of hot area that's got a lot of growth, then you would expect new entrants to come in and try and take some of that market. Right? It's kind of come back to economics 101. You have given us a couple of charts here. You might just throw them up to show global prevalence of obesity. Yeah, I mean, that's not a pretty chart, is it? It's going up to the right, and obesity sales here on the right. So again, some pretty big growth there.
Yeah.
But the stock's done well. So if you come back to the price chart here, the blue line, it's up 100%, doubled in a year.
It's done very well. I mean, just generally, if we say health, what was the healthcare story of 2023? The obesity story. Yeah. And that was essentially it. It was interesting as well if you were to look at different areas, say August, September time, and what actually the obesity data and the sales were doing to different subsectors. Some consumer stocks were getting hit because nobody would want to eat a burger anymore.
McDonald's was down and Coke was down, wasn't it, for
exactly.
a few days? It was extraordinary.
And then also that had a knock-on effect to sort of orthopedic stocks, because it's like, well, less pressure on the joints, you're less likely to need a knee replacement. But then there's another side to that argument too, because actually some people are ineligible for surgery because of their BMI, where if you're able to bring that down, they then become eligible. So there's more to it than just being like all these stocks are completely out of favor. But a lot of that, the different subsectors have recovered a bit. But the healthcare story of 2023 was obesity, and Novo Nordisk obviously benefited from that. So
and the drug works in it just takes away your appetite, your requirement for those not bad foods, but those that sugary.
It gives you the sense of feeling full.
Right.
So it satisfies your hunger and makes you feel full, so then you're less likely to snack. It's not that you can go out and eat as much as you want and then take the drug and you're fine. No. It makes you feel fuller, so you're less likely to snack. But the valuation, obviously, when we talk about pharma companies being, as we said, in the typical 10 to 20 times PE range, Novo obviously is a significant premium to that, but it does offer greater growth.
So what's Novo trading at now?
Probably just over 30 times.
Is it?
Yeah.
It's up there with Ben stock.
Yeah, some of them.
So it is a significant premium. But I think there's just so much excitement.
What growth rate is that?
Double digit. So I think Novo's guiding to sort of 18 to 26% top line growth next year, and earnings something similar. Okay. So it is. There is a lot of growth opportunity there.
Yeah.
Be interesting to see how this plays out, both from Novo's perspective, because obviously the stock price, you could argue, is pretty hyped. So there's a lot of good news in the share price, but also from a societal perspective, how does society kind of deal with this and what happens in time? So that'll be an interesting one to watch. For sure, but I think with that's our full stocks done. Husey, any burning questions from you? I mean, obviously you're the thinnest man in QC, so there's absolutely no way you're going towards this.
I was going to apply for it.
Size 28-inch waist. So I think with that we'll wrap, shall we?
I think it's great for people to understand or to see an insight into the conversations we have with
100%.
our analysts and the experts in their fields. It's brilliant for us.
It's really good resource, in terms of investment managers and doing the data.
That was only 5-10 minutes of stock. We can talk for a lot longer.
Yeah,
I'm aware.
With that, thank you very much for joining us. Thank you to Sheena and Ben and to James absolutely. As always. Yeah. And any questions, let us know. james.hughes@quilter.com or jonathan.raymond@quilter.com, and we hope to see you next time. Thanks very much.
Thank you.